Welcome today to Phil Grant, Managing Partner at Nexia ASR. Hi Phil.
Hi Fiona, how you going?
I'm good. Look, the word on everyone's lips at this time of year is of course tax time. I took a call from Michael, who works with you at Nexia ASR, and he said to shoot our accounts over so he could take a look and have a think about a bit of tax planning, make sure everything's in order and right for the end of the financial year. Now, everyone's going to be in that situation, aren't they? So I'm just wondering, what is it that accountants are looking for in May, June in order to make sure their clients are sitting right to prepare the end of financial year accounts?
I think what we're looking for is just trying to get a picture of how things have travelled. We might have a high level idea about where things are at, but it's more about understanding at a more defined level what the numbers are likely to roll out at, and then to make sure that whatever needs to be done pre-30 June, and truthfully there isn't a huge amount that can be done. Mm-hmm. You know, if you intend to make a superannuation contribution, you haven't done so, that needs to be paid before 30th of June. If you know you need to make sure that you've picked up all your expenses that need to be captured, things like that. It's really a bit of housekeeping. Truthfully, there isn't a lot that can be done to reduce tax in a legal manner. Mm-hmm. The idea is to get information, so at least we can then project forward what we think the likely tax liability is going to be, and then to inform you about what the likely tax obligations are going to be over the next 12 months or so. So it's really to keep the client informed about where they sit, because ultimately it's cash flow planning.
Mm. Is it a bit of a prompt as well? Because I had a stash of cash receipts, i.e. where David and I had spent our personal money on business items and we'd used cash, and I had a stash of those and they went back to last July. And I went, okay, Michael, I actually have to write all of these up and get them into the accounts. Other businesses would be like that too,
look,
surely.
There's no doubt, and that's housekeeping. Yeah. It's just making sure that you've captured everything that needs to be captured, and it's a good time to do it. I mean, the reality is, with those types of items, if you've spent the money already, it doesn't really matter when you process them, but no doubt there'll be some GST involved, and you want to claim that back too before the end of the year. So it is housekeeping, and it's good to capture that information while it's relatively fresh in your mind, rather than waiting later when you sort of forget about it and you miss out and then it's too late. So look, it is just an opportunity just to take stock and just to make sure that your records are in order. We can then cast our eye over it. We can do a bit of a projection to the end of the financial year, make an assessment about how we perhaps will deal with the income, if it needs to be distributed, if you're in a trust structure, or how it will be managed. There are recent changes in tax rules regarding companies and the treatment of distributions. That means
distributions have to be actually distributed.
No, they don't. But as of yesterday, there was a final tax ruling which was issued, which we're all trying to get our heads around, which may mean that you have to do something like that. But look, it's good to just simply touch base and just to say, well, what position I am and what do I need to do. It might be nothing or it might be something. So unfortunately, we do have a drop dead date of 30th of June, and some things will have to be done by 30th of June. Every client's in a different situation. But to me, it's more about if your structure's right, and I'm, as you know, very big on structure, the rest should look after itself. So the housekeeping needs to be done, and then you just sort of say, well, what's the bottom result, the bottom line result, and then how are we going to manage it, and then we transpose that into a tax cash flow for the client, so they know that they can plan it in the next 12-month cash flows to what their obligations will be. Because as you know, yes, you pay some tax along the way, but it's always a bit of a catch-up sometimes, because the business is always changing. So it's a matter of making sure that clients clearly know where they're at.
How does the ATO sort of deal with that? Because, I mean, business is so much more dynamic now, isn't it? The ups and downs can happen at a much faster rate than even 10 years ago. When you're on the slide then, it might have taken 6 months, but you could hit a wall in a week in current times. So how does the ATO, get their head around the fact that business patterns really have changed and it's a lot more volatile and dynamic?
Well, I mean, we have a system where we pay tax quarterly through what we call the PAYG system, pay-as-you-go system, and that is always based on the most recently advised information to the tax office. So typically that might be based on your prior year's activity, and as you rightly say, your prior year activity might not be a reflection of the current year's activity. So there is the ability to vary those instalments based on current activity, and you need to take care, because you can't, if you over vary. You can have penalties for underpaying tax along the way. But there is the ability to communicate to the tax office that your circumstances have changed and that your tax obligations should reduce. But it's a matter of managing that, and that's part of our job to help manage that, so we can sort of steer it in the right way, so you're not paying too much, you're paying the right amount at the right time, because ultimately it comes back down to managing cash flow.
Just one more thing to do with the tax office, it being tax time. We had a letter a few months ago from the tax office, and it was about income that we'd been receiving from overseas, and that was earned income from an overseas client that we're consulting to. Maybe you could explain a bit more about what's going on there, because I know others have received, others I know have received a similar letter too, and they're doing business online, and a lot of their income comes from the States rather than Australia.
Sure. Well, the government, through AUSTRAC, monitors any significant sums which flow across border, and a lot of that's to do with, money laundering, terrorism, all those horrible
the bad
things,
stuff.
The bad stuff that 99% of us, I hope, are not involved in.
Yeah.
But
not normal commerce.
No, that's right. And of course, it is also a mechanism for tracking undisclosed income if it is not disclosed in your tax returns. So you just got to be conscious that yes, you might get a letter, and I think if you recall, the letter said if it's all fine, there's nothing to communicate. It's all about voluntary disclosure. You don't do anything and just move on, and obviously in your situation that'll be disclosed as income and tax will be paid on it accordingly. So there's really nothing to be concerned about, but it is something to be conscious of, that yes, they are watching. It is Big Brother, and they are watching, and significant transactions are being tracked. And in today's environment, it's all electronic, and most of it's electronic, and so they'll see everything that's going through everyone's bank accounts, and they'll ask questions where they think it's warranted.
I actually don't have a problem with that. I think if you're running your business, as you say, you're structured right, and your business is working, or you're working to make it work, then why would that be a problem?
Sure. I guess it's not a problem. I guess it's just as long as it doesn't become too overbearing, and then it just becomes
a time issue.
Well, that's right. It just becomes another thing you got to deal with, which is really gets in the way of you dealing with what's important, and that's running your business.
Thanks for your time today, Phil.
Pleasure. Thanks, Fiona.
I've been speaking to Phil Grant, who's managing partner at Nexia ASR, a boutique accounting firm in Melbourne.